Hello, hello, guys. This was a trades once more. And so this is a weekly analysis for the next week. That's gonna be starting 23 to 28 November week. February week, I mean. Why am I thinking about November this year? But yes, that February, the end of February, right? Is the last week next week from 23 to 28. So just looking at this, the US dollar index. So this is an advanced analysis on it. We're gonna go really deep in this, right? It's really advanced. So uh we're gonna go in the month. In the month. So on the month, we see here we have a low here. I'm gonna take a brush. No, not even a brush, but this low here. We have this low. Let me do this so that you can see clearly. We have this low here. So it's made up of a higher candlestick on the left and a lower high like on the left and a lower high on the right. So it's a swing low like this. So this thing's on the monthly. Where are we right currently? Oh, my bad, my bad. Let's do that. Let's do that. So the low I was talking about is here, right? It's here. What did the market do? Let's go down. So the market just went up here and it reversed somewhere there and turned. So from this low here, swing low here, it went up. So there's a currently we're here. We have not taken the swing low here. So it's highly unlikely that the market will move from here and go up. Maybe let's say go up, take this high and that high. If in this case this liquidity here still exists, it's gonna be like a weight. Don't try. It's heavy. It will be heavy for it to go up, carrying this weight here. So it must come and unseat these guys. So basically, here we're on the monthly time frame. We're anticipating that this very month that we're in, we're anticipating that we're gonna close in here, right? To take out the swing low here, right? And this fair value gap, it's a very powerful fair value gap. It's a very powerful fair value gap because it's a fair value gap with sell side inside, right? That is high probability, this one. It's high probability fair value gap. So currently we've missed it, showing a bit of strength for a little retracement. That's okay. That's okay. So I'd like I like to see it come at least here on the monthly volume imbalance here, which we'll see when I go to the weekly now. And as we can see, these levels, this is the low, 0.25, half of this candlestick's wick, right? This candlestick, we've measured its wick starting from here, basically starting from here at the top, then up to its low. So let's go on that wick. So now we're on the weekly time frame. I'm gonna move this one here so that we can see the flow of what really happened here. So the market closed in this fair value gap, went lower, it went up again, weak holding, went up above this high and broke lower. So when it broke lower here, swing low here was taken, candle a higher low on the left, on the right, and a higher low on the left, right? So the swing low here. So we shifted market structure here, went back into selling, and then went up, into fair value gap. Let's do this. Into this fair value gap here. It went here. You can even do this. We have this one here. Okay, let's do that. Okay, go. So we have this fair value gap, which is called an inversion in this case. Ooh, ooh, ooh. This one here, let's do this. It was used here to go higher. So now when we're going down, we're going to use the same fair value gap from this candlestick's low here to candlestick high here. This fair value gap now is going to be used as a bearish fair value gap. And we'll see that very thing here happen, right? If we mark it from there, okay, we go to an extent to the right. Let's, okay, let's do this. Let's make it a bit orange to represent the weekly, you see? So this was treated as an inversion, a bearish inversion fair value gap, right? When we're coming into that, we know we can wick outside of it like this. That's okay. And then, but it held, like, see, it is just displaced lower, breaking yet another swing low here. Then it went lower, taking sell side here. And then here it missed this PDR here, this high probability fair value gap from the monthly. It missed it, showing that it can have started to go up, hence this retracement into this fair value gap here. So it used this one here as an inversion, bearish inversion. Now we want to see how it's using this one here, right? So, but then if we zoom in, we're going to see clearly that this is the monthly volume imbalance I spoke of from the monthly time frame. Here, from this candlestick here, it gets into this fair value gap here, but it can't close above 50% here of this fair value gap or consequent encroachment. I see Timaro. Why did he have to do this? And then the next candle goes down. That's good. That's what we need to see. But then it doesn't go down to take out the low here, right? Just goes down and stays on this level, which we measured this week here. Just stays there and then goes up. So now, last week, it went above 50% of this fair value gap, right? Above the consequent encroachment, right? Consequence encroachment, above that. It went there. That's half of this fair value gap, right? It's half. If you put your fib here to here, you see that this dotted line represents half of this. So by not closing above here in the upper that in the upper half, it's telling us that it's weak. That's what we want to see if we want to sell weakness. So all of this is telling us that it's weak. So next week on Monday, from a from a from a daily perspective, I'd like to see it just do this, but not on the weekly time frame, on the daily, and fail around here on Monday, probably fail here, and then I'd like to see it go lower. Right? That's me. So that's what I'd like to see. So because we'll be moving from a monthly suspension discount array, while we're here above there, coming down, this was discount. So now we are using this discount array, we're gonna go up into a premium monthly array, right? So we can't go there, we can't reach so far. So it's telling us it's weak. So should on Monday it open and go there quickly, we'll know that on Tuesday, Wednesday, Thursday, and Friday, we can just sell this thing because already here on the weekly time frame, it's telling us that it's weak since it can't close above here. So let's go on the daily. So weekly, we're saying from the weekly time basically, let's just clear that so that it can be clear that us, we're seeing that this thing can from here. Oh, no, no, no. We'll do that. You can see that. Okay, okay, okay. Okay, okay, okay. So this is it. We go like that, right? This is what I'd like to see. Basically, in a good day, I'd like to see, in a good week, I'd like to see just 1 week like that. Really? This is what I'd like to see. Just 1 week doing this. Right? 1 week. Or we could have it like this. We can have it something like this. And then a little bit of movement, then go lower into this. But because next week is the last month of February, and for February, I'm still bearish, this is what I'd like to see for next week. A big move coming in there, right? But I looked at the calendar, doesn't have much news like that to support the idea, right? But then this is what I'd like to see. Okay, let's go on the daily. Okay, when on the daily time frame, you can see that we are missing that volume imbalance here. We can't reach it, weakness, uh, and we can't even close above zero, half, 0.5 pre-week. This is the week from the monthly. So we can't even close above this week. So that's telling us weakness, right? Because we're treating the weeks the same as gaps, right? So every time we can't close above 0.5, it's telling us that it's weak. But it has a potential, from where it is, you can see it has a potential to probably do something like this. And then I'd really, really love to see it fail. Just like that. This could be our Monday, right? But I'd love to see this. Oh, this is gonna be sweet. No, 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 don't do that. This is gonna be sweet. This is what I'd love to see. Sweet, right? Like to see this. This is for me, this is 1 week, right? It's 1 week. I'd like to see this. So I'm bearish for the whole of next week. This is what I'd like to see. Taking sell side here, volume imbalance in there, and then again this sell side here, right? I'd like to see it being taken. So basically, you could see such a move like this. If we this is a daily one, daily suspension block. So also if we fail above it's 50% here and fail and not close above this, above this line here, this 50% of it, that's gonna be brilliant. So that's gonna be the sell that we're gonna be calling. Just like that, this is me on the DXY. Then after this, uh let's just go. Okay, let's go into the monthly once more. Wanna see something? Okay, let's go in there. Can extend you. Why are you extend? Can extend. Let's go there. There we go. So this value gap here is more likely to be used to go higher, right? It's more likely to be used to go higher. So from the monthly time frame, we can see that this is more likely to be used to go higher, right? This is more likely here. But this is long term, right? For short term, I'd like to see it come in here, right? And after that, we will see that does it want to come and use this. If it wants to, then we'll buy it from here. And we're gonna trust this buy. Why? Because here is a high. So this is a high here, and then here is short-term high. It's a high, short-term high, and then this one, it's an intermediate term high, right? This is what you have. So you have a high, a short-term high, which is represented by this one, an intermediate high here. And how do we trust that if the intermediate high? Uh, we trusting we trusting that it's an intermediate high because of it has fair value gaps, has fair value gaps, has fair value gaps. So we're gonna trust it because it has a fair value gap, right? So what's the characteristic for that intermediate high is that any move coming down should not take this yeah, level level to be kept, right? To so if this is really an intermediate high, then this level is gonna be kept. So when the market is gonna be coming in here, we're gonna be able to buy it and just putting our stop just below here, right? Just below here. We won't put it below this level here. No, we're gonna put it below this one. Why? It's an intermediate high. Short, right? It has a short-term high on the left. Right? You can see it's lower than it. And itself is an intermediate high. High, short-term high, intermediate high. But this intermediate high has a short-term high on the left, and we anticipate another short-term high, a low, I mean, on the right, in this side. So we anticipate it's gonna come in there and go do this. And then we're gonna trust this level to be kept, right? This is advanced. That's why I said advanced US dollar analysis, because very index analysis, very advanced. So short term, we're gonna look for this level. After this level, we're gonna see if this one's gonna be used. If they use it, we're gonna be interested in buying here and putting on stops below here, right? So currently, that's what I see. We'll wait for Monday. We're gonna see Monday. Okay. So on Monday, if I move this one, you can see because we're cutting through candles, you can see the suspension block is coming from this side here. But we keep extending it because it's gonna be used and used and used by the program. You understand? So I'm just gonna put it here. So we're gonna anticipate this and this. We're gonna anticipate something like this, right? Then from here, we're gonna ask ourselves, can it reach here? As you can see, it's a nice low, relatively quite lows here, sitting here. They're very nice, right? Right there. So it's more likely it's gonna come in there, but we'd like to see this level here staying, remaining. That means anything below here should not take this. If indeed this high short-term high here, intermediate high from the monthly time frame. So everything here is looking bearish. Looking bearish. So now, my bad. Since it's looking bearish like that, uh, I'm gonna go to investing.com because this is very advanced. Investing, we're gonna see the the commodities, right? Because the commodities go along with the US dollar. With the US dollar, let me send this thing back up there. Let's see the commodities. Commodities. Okay, charts. Gonna go to live charts. So here we're gonna check out the commodities markets, things like corn, wheat, soya beans, those things, if they're going up on a daily time frame, then we understand that it's more likely that we're gonna go down on the DXY, right? Okay, crude oil here. This is crude oil. Let's see, crude oil. This is crude oil. Okay, we'll come back to crude oil. But now let's go to ZS. ZS, soya beans futures. So we're gonna go on the daily and see what do we have here. Okay. Uh, I want to change this thing, this cross marker here. Okay, cross marker. There we go. You go. Let's zoom in. Daily time frame here. Okay, let's go on the weekly. Oh, ZS. So this is the weekly time frame, guys. Soya beans, weekly time frame. So immediately we can see here that from the weekly perspective here, we see that, zoom in there. This is the last fair value gap that we see here that took out liquidity, right? So this wave here going down is a breaker. So we have a breaker here, right? So the fair value gap, the last fair value gap, that when we take liquidity, sell sides here and here, is gonna turn into a bullish fair value gap later on. We're gonna use it as that, right? So okay, let me pull that there so that I can move it properly. Okay, more or less. Let's do. There we go. Okay. There we go. Yes. Now it's put correctly. So we can see that we're coming in here. We spend some time in there, but eventually hit the top and ran off, right? So if we zoom in here and then we take your Fibonacci. Okay. Here's your Fib. And then you're gonna put it on the top there. Okay. There you go. We can switch off of these background colors. Yes, okay. We don't have background colors anymore. We can change this to 7.5. Half we don't need you. We need you. We need you 2.5. Okay, don't need you. Don't need you, don't need you, don't need you. So yeah, that's it. There we go. So now the fib is nice and clean, right? You see? Nice and clean. So, because we can, let me put it this way, because we're coming inside this thing. So this is one, the full measure of it, and this is the start of it here, right? So now we can see that here, which is like another threshold for us, 0.75, the market stops. It stops right there and turns, right? That's good because it can't close all of it. It's telling us that it's strong. It goes up, comes back in once more. The green line represents half of it. If I zoom in, let me do this. Okay, trend lines. I want to press this thing, the rectangle itself. No, because I want to change the color. Yeah, to some nice color like this. So you see, we come in here, you get the numbers here. When you come in here, we can close below 7.5. That's good. This is the upper, the lower third of it. We can close in here. That's good. Went up and coming back inside, we can close below 0.5 of this bullish fair value gap now. That's good. It goes up, showing that we are right. Then it plays around here, goes up, comes back in. Even now, can't close. Zoom in there. Can't close. This candle can't close below. This one does. But because it's strongly bullish, immediately the next one shows us that no, we are bullish, right? Goes up, giving you here a nice fair value gap to buy, right? So looking at this, we go up, and when we come back, we touch the top of it, the high of it, and then we go up. So what's next for this? What's more likely to happen here? Okay, let's see. Okay, we are more likely to come, take this high here, take this high here. And if you really want to do the work, we can, these are the highs that we can work. Here we have a nice balance price range here. So that's what we have. And we also have some nice action above here. So let's do this. Okay, I want to mark half of here. So make it a bit black. Okay, so this is soybeans, right? So you can see in soybeans, we more like take this high, also take, yeah, we're more likely to take this high and this high, right? The relatively equal highs, go above them, and we are more likely to take this high too. Then we also have these relatively equal highs here. Uh, the nice really nice PDRs somewhere around here. Also have relatively equal highs eventually here into this volume imbalance here, right? So clearly bullish, and we have these relatively equal highs right there. That's nice. Yeah, so what I'm saying here is that I'm bullish on the soya, on commodities. So what does this help us to do? It's helping us frame uh, it's helping us to basically all of this for me going up liquidity here, buy side liquidity here, right? Relative equal highs. So this high and this high, they're relatively equal highs. So they're more likely going to go above them. Short term, we know that this is more likely to happen. And this high, I can see it out too. It's more likely to be also taken out. Okay. Okay. So this buy side here, liquidity. This buy side liquidity in form of relatively equal highs, right? So we're gonna move this on the right top, and then we're gonna make it right on the top, make it a nice black color, bold it up. That's nice. There we go. So I'm seeing much bullishness here for corn, right? Oh, my bad for soybeans. I'm seeing this. So this is what is this telling us? It's telling us if we are bullish here on commodities, then we should anticipate. Let's start with this one here first. This one here like this, because this something like this can happen in one week. Yes, let's start here. Short term, I'm gonna just look at these. After this, you can see this ones, then clean this highs here, and then eventually go in here above. Yes, so super bullish for soybeans. Nicely, nice relatively equal highs here on soybean. This high and this high, they're so nicely close, right? They're gonna be taken out. I can see that. It's nice liquidity just resting here on the daily for soybeans. So this is more likely to cause US dollar index to keep doing its thing, to go down basically. Because if we're bullish here on commodities, we should anticipate that we're gonna sell what the DXY. This is Okay, let's go on the weekly. Oh, no, man. Z S. No, no, no. W, ne? Yeah. Soya. Soy. Was it? Is this one? So basically, we just bullish on futures, on commodities, I mean. So our commodities are all bullish. Uh, Soybeans. There we go. There's our chart here. I wanted to go on the weekly here. Ah, because this is so nice, right? On the weekly, we can anticipate something like this. I'm trying to save it right now. So yeah, so let's check corn on the weekly for corn. My bad. Corn This looks suspicious for me here, but in any case, I'm gonna stick with bullishness here. Okay, I'm gonna stick that. I'm seeing corn still also bullish. Corn, wheat. Uh, let's check that wheat. So if you wanna see the strength of the US dollar index, you check these things. And so if wheat is going higher, corn is going higher, soybeans is going higher, then you know that if the US dollar index is going down, then it's gonna be strong. But if you find that these ones are going higher, the commodities are going higher, like wheat is going high, soybeans is going high, and then you see the DXY going up, that move is probably a Julius swing. It's probably a false move on the DXY because of the commodities are showing that. Mm. Okay, let's get back on the US dollar. So the US dollar, also you're gonna pair it with what? You pair the US dollar with Euro US dollar. So let's go on the Euro US dollar. It's the monthly, the weekly on Euro US dollar. So basically, if we are seeing the opposite of Euro US dollar, the Euros dollar and the weekly so are going opposite. So if the US dollar index is going down, we find this one is going up, right? They're going vice versa. So here, for me, I see this was a consolidation. So we are more likely to come into half of the consolidation here and go higher. That's what I'm anticipating. Touch half of it and go up, right? So I'm anticipating something like this here and there. I'm anticipating that it just does something like this and goes up, right? So, because even on Monday for US dollar index, Monday for the US dollar index, I'm expecting that goes up a bit and goes down. So here I'm expecting that on Monday we go down a bit like this and go up right there. So that's how it works. Thank you guys. This is Social Trades. This is just advanced analysis. So basically on gold, what we're saying on gold is that we anticipate gold to go and take its all-time highs, right? We're anticipating gold to do what? To take its all-time highs once more. So basically on gold, Mr. Gold, Mr. Gold. There's the anticipation that on gold, because we just go up, right? We're more likely to go take these levels. Ideally, we'd like to see just take the highs, right? Next week. But I don't see that much volatility like that. Probably go high and reach some level here and then go up still. But bullish on gold. This is Social Trades. This is advanced analysis on the US dollar index. If you want to really see the strength of it, you must go and check out the commodities like I was doing. Thank you, guys. So, Mr. Gold, bullish gold from its levels here can do something like that. I would like to see it go up.